Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, a national day of mourning honoring the life and the legacy of President Jimmy Carter.
Jimmy Carter, we can all celebrate his life.
Yes, we can.
We hear from longtime Carter advisor and one of today's eulogists, Stuart Eisenstat.
On the economic issues, he was certainly punished. But the important thing is that he laid a foundation that made it much more innovative, gave us a much more competitive economy.
And in California, fires rage on, homes gone, and much of the burning still uncontained.
And not just the schools and the personal devastation, but here we are in a business network, and the long-term economic impact of this is real.
Plus a big picture conversation.
It's not your granddad's private equity firm from the 80s, and if you are, you're not raising any money.
Private equity pioneer Steve Klinsky on deal-making then and now.
It's gone from a form of finance to a form of business. I mean, when I was with firms in the 80s, we had 5 professionals, and you're borrowing a lot of money. My firm now has 250 people.
Those conversations and much more this Thursday, January 9th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everyone, and welcome to Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. The markets are closed today in honor of former President Jimmy Carter, but we do still have some trading. Treasury yields have been the big story. That's what we were following so closely yesterday. You watched the 10-year get all the way up to 4.73% yesterday during the trading session. That's the highest we've seen since April. This morning, they are lower, 4.67%. The 2-year sitting at 4.27.
Did the 20-year get over 5? I
don't know.
I saw the headline was we fit 5%, and I said where? And because it wasn't the 30-year.
We don't even have the 20-year on it.
No, I know, but I think it was the 20-year hit 5. That would be, I guess it go like that, come back down.
Yeah.
Now to the big topic of the day, the morning, the country, California, 5 people dead, more than 130,000 evacuation orders as wildfires raged and ravaged communities from the Pacific coast to inland Pasadena. The worst of the winds that helped spread the fires subsided yesterday afternoon. That's the good news, but there have been more strong winds, and those are expected today. The National Weather Service described it as a long-duration event. At least 6 schools in the area were either damaged or destroyed. UCLA has canceled classes for the week. The fires ripping through highly populated and very affluent neighborhoods. Among those reported that they'd lost their homes, celebrities Billy Crystal, Mandy Moore, and Paris Hilton. Now, President Biden signing a federal emergency declaration during all of this after having arrived now at a Santa Monica fire station for a briefing with Governor Gavin Newsom yesterday. President Biden canceling a planned trip to Italy, citing the need to help monitor the response to the fires. By some estimates, well, there were estimates yesterday. They're probably growing at this point. I saw 52 billion. I saw 57 billion. Some of the insurance companies obviously getting hit. Allstate, Chubb. You can go down the list. Travelers and the like. But it's not just that. It's going to shut down L.A. I mean, you're not just the schools and the personal devastation, but here we are in a business network, and the long-term economic impact of this is real.
It's just so sad watching these fires burning out of control. When we were watching this yesterday, last night, at least it was still 0% that had been consumed.
Frightening to live out there because it can happen at any time. And I lived there. And when I was there, the big, there was a huge one of these, and it was the La Cañada Flint Ridge fire. And I can't remember, I mean, it was a long time ago, but it's almost like a flash fire. You're there 1 second, one little airborne flash comes and lands on your roof or something, and then you're done. You try to soak down your house or do whatever you can, but there's really, with 100-mile-an-hour Santa Anas, it's nothing you can. I mean, those winds get to 160 miles an hour, 170 miles an hour. Hurricane strength winds.
Hurricane strength winds, but zero humidity, very low humidity that comes with it that dries everything out.
And when you think about, I was actually trying to think about just the impact to the city long term. I mean, some were comparing this to what may happen, what did happen during the LA writer's strike, which you may say to yourself, doesn't sound like anything compared to this, except for the fact that basically every studio in town has shut down now. Most, schools are shuttered in lots of places. As a result of that, by the way, parents aren't going to be taking their kids to school, which means they're also not going to be working. I mean, this is...
it's just devastating.
There's true devastation here in people's lives, obviously, changing in a material way as a result of all of this.
I don't know if you saw James Woods speaking yesterday. He lost his house as part of this too, after just being able to rebuild all of these things. He was pointing out, look, nothing compares to the loss of life that was happening here, but just the devastation. People, the lives being destroyed.
I saw an extended interview, a subsequent interview with him on Laura Ingram's show last night, where he was on for almost a half hour, I think, talking about what his neighbors did and a lot of different anecdotes. But it was hard to...
We've all been talking to people.
Yeah, hard to watch.
We'll be talking a lot more about the impact of this historic and very tragic moment in Los Angeles.
U.S. dock workers and shipping companies have reached a tentative labor deal to avert a strike. The agreement still be ratified by port employers and by tens of thousands of members of the Longshoremen's Association. In a joint statement, the two sides said that the agreement protects current jobs and establishes a framework for technologies that will create more jobs while modernizing East and Gulf Coast ports. Sources tell CNBC that a compromise on automation was key to the deal. They say full automation is off the table, but port operators will have the ability to add technology that will help modernize the ports. The longshoremen have a guarantee of specific jobs that would be associated with specific equipment that's being added. This is been talking about this since it almost happened, since it did happen, and then pushed off till now, and then it was one of the things coming up in the new year that we were worried about for inflationary and everything else. So it's nice to move this aside.
Let's show everybody shares of eBay because they jumped by 9% yesterday. This after Meta said that it would allow some listings to show up on Facebook's marketplace. Meta is going to test out the rollout in Germany, France, and the U.S. Buyers will be able to view eBay listings directly on Facebook Marketplace and complete the rest of their transactions on eBay. Now, Meta's move is an attempt to try to appease European regulators who would fine that company more than $800 billion, I should say $1 million, not $1 billion. We're living in a billions world these days. $800 million in November for tying its marketplace product to the main Facebook.
Soon to be trillions. We're going to have a trillionaire.
We may very well soon.
I think people are trying to figure out what the next number is. Quadrillion?
It is quadrillion. We did that, I remember years ago. This whole setup has got me kind of...
It's because you don't like change.
I don't like change. I feel like if everything's okay, we'll be fine. But we're too close, I think.
Physically, we're on a little tight desk.
I mean, I can almost, and you could almost, and you
in the middle here.
Aren't we close? Don't you feel closer?
Even at the desk that we're on temporarily.
Do you feel closer symbolically or just closer?
Yes, we are united.
Both. All of the above. Well, let's keep it that way. Okay. Because it's Jimmy Carter, we can all celebrate his life.
Yes, we can.
Cheese will be next.
Coming up, a special conversation with Stuart Eisenstat, Jimmy Carter's White House domestic policy advisor and one of the late president's eulogists at Thursday's state funeral. Jimmy Carter's legacy.
It's important to know what he did on inflation because this clearly was an Achilles heel. How did we deal with inflation? First of all, the president genuinely was one of the first people in the White House to recognize that this was our number one problem.
You're listening to Squawk Pod from CNBC, and today is a market holiday honoring the late President Jimmy Carter. Here's Becky.
Former President Jimmy Carter lying in state in the Capitol Rotunda. Right now, we want to take a look back at his economic legacy and lessons for future administrations. Emily Wilkins joins us with more. Hi, Emily.
Morning, Becky. Well, yeah, lawmakers paid their respects to Jimmy Carter these last few days, but when Carter was in the White House, Carter did not have the best relationship with Congress, even though it was controlled by members of his own party. Carter, much like President-elect Trump, they both ran as outsiders and really kind of were outsiders when they first arrived to D.C. Kimberly Martin, an assistant professor at Georgia Southern University, said that their unwillingness to conform to Washington insider culture sometimes led them both to clash with members of their own party.
We do see two people who are coming in as political outsiders, two people who are learning how to be president as they go along. And sometimes that trips them up and sometimes that helps them in the end.
Another parallel, Carter was also a deficit hawk. He tried to root out wasteful spending in the government. That was, of course, also something which caused some tension, again, within his own party. Other Democratic lawmakers, they saw their victory, they saw their trifecta as a reason to spend money on their priorities. And Carter was sometimes at the point of trying to hold them back. Carter also embraced some deregulation. He focused on energy policy. These are also items that we're expecting to see under President-elect Trump. So while Carter is, of course, in the Capitol Rotunda, the center of D.C. today, some contrast between where he was at and where we're actually currently at with this next administration. Guys?
Emily, a lot of different contrasts that you can look and look back to, including President Carter with the current administration, President Biden, just in terms of the inflation that brought down Carter and very, very much brought down President Biden as well. Just inflation that raged out of control. I've heard some people talk about the idea that President Carter actually tried to address that by installing Volcker. Volcker did raise rates pretty significantly, and eventually that worked, but not in time to help President Carter politically.
Yeah, and another thing that Professor Martin kind of mentioned to me during our conversation was that, some things that Jimmy Carter did with the energy industry, they might not have paid off while he was in office, because you did see the raising rates of oil. But what you did see was that generations after he left, or rather several years after he left, you started to see the policies that he put in place pay off. And it does make me wonder, for President Biden, he did pass this major legislation on chips and semiconductors, also passing major bill when it comes to transportation infrastructure. It was something that Democrats really struggled to communicate to voters, saying, hey, look at all this stuff that we've done. Will be interested to see several years down the line, is there a sense that Biden's policies paid off, not in time for him to be able to win re-election or really even make it to the election, but maybe in time to factor into his legacy.
Emily, thank you. Joining us right now is Stuart Eisenstat. He was the chief domestic policy advisor in the Carter White House. He later served as ambassador to the European Union and deputy treasury secretary in the Clinton administration. He is eulogizing the late president later this morning. Ambassador Eisenstat, thank you, first of all, for joining us this morning. I was hoping you could take us back to when you first met President Jimmy Carter.
Thank you. It's nice to be on your program. I watch it very frequently. I actually first met him in 1969 when I had gone back from the White House of LBJ, where I came and then was on Humphrey's presidential campaign in 68. And I met him in very inauspicious ways. That is, he was in an office in a building called the Hurt Building, with the only furniture being a folding table and two metal folding chairs. And he came in to the office in Atlanta with work boots and khaki pants. And I said to myself, what am I doing here? Is this guy got any chance of being governor? It took 2 meetings to convince me that he could bridge the urban-rural gap that we have in Georgia. He was a farmer from the deepest part of South Georgia who understood urban problems. He supported mass transit. He was moderate on civil rights. He wanted to reorganize the government, supported stronger state funding of education. So I was his policy director then, was his policy director in his presidential campaign from 74 to 76, and then 4 years in the hot house of the White House.
Why don't we talk a little bit about President Carter's economic legacy? It's something that people are looking back and trying to dig through. Obviously, he dealt with raging inflation. He dealt with much higher energy prices, but he put a lot of pieces in place that he may not always get credit for. You want to walk through what you think of as his economic legacy?
Thank you for giving me that opportunity. He lost in 1980 to Ronald Reagan overwhelmingly because of what I call 3 I's. Inter-party warfare with the liberal wing of the party, inflation and interest rates, and the Iran hostage issue. On the economic issues, he was certainly punished. But the important thing, Becky, is that he laid a foundation that made it much more innovative, gave us a much more competitive economy. And you don't have to take my word for it. Conservative Senator Phil Gramm from Texas wrote a beautiful op-ed article in a Wall Street Journal saying on his 100th birthday of Jimmy Carter that he put in place the deregulation of natural gas and crude oil, which has made us energy secure, led us to be the greatest producer of oil and gas, put in place the renewable energy and conservation ethic that we have today, putting a solar panel on the White House. And critically, he deregulated every major transportation industry. Airlines bringing air travel to the middle class. When he came in, 50% of the public had never gone on an airplane. Today, 90% do. He deregulated railroads and trucks, which made supply chains much more efficient. He deregulated telecommunications, which made possible something like CNBC. It really gave way to the cable era. He even deregulated the beer industry, leading to local craft industries.
That was to help Billy, Stu.
Billy Bear?
That was to help Billy.
Well, it didn't, but
Right.
but it's important to know what he did on inflation, because this clearly was an Achilles heel, and there's no way around it. We had double-digit inflation. We had double-digit interest rates. But that came largely because of the second oil shock in the 1970s. President Nixon also had double-digit inflation. So how did we deal with inflation? First of all, the president genuinely was one of the first people in the White House to recognize that this was our number one problem. He gave a national television speech in 1978 saying this was our number one problem. Number two, we had two anti-inflation czars. We had wage and price guidelines. We had a labor management advisory report. None of them worked, including a very low budget deficit. And I really want to drive this home. He was a fiscal conservative. Our budget deficits were 2.6% of GDP, much lower than Reagan's, and God knows much lower than today. So that didn't help either. But here's what did. July 1979, inflation is raging. He tried all these other things and nothing worked. And he said, I'm not going to let inflation be my legacy to the American people. And over the objection, and I assure you, I'm not exaggerating, of every one of his advisors, he decided to appoint Paul Volcker to head the Federal Reserve, knowing in advance, because Paul told him in the Oval Office he was going to choke inflation out of the system by high interest rates. And he said, Mr. President, this is going to mean in your re-election year, you're going to have a very difficult economy. We won't have whipped inflation yet. We're going to have potentially higher unemployment. And the president said, Paul, you take care of the economy. I'll take care of the politics. And in fact, as we all know, Volcker succeeded, wildly exceeded anybody's expectations. Inflation dropped like a rock, but only after Carter's defeat in Reagan's first 2 years. And ever since, it's been there. So he really, even there, put in place something that we've lived with in a major way, that is lower inflation. He wasn't the beneficiary of it, but he created the foundation of it. And that plus deregulation. And deregulation, I mean, of energy as well as major sectors of the economy, really was a positive economic legacy, but it didn't occur in time to benefit him for his reelection.
And he pushed back against a lot of the left. What you just described, Stu, I hate to tell you, deregulation, not wanting to spend a lot of money. Maybe he was in the wrong party, Stu.
Joe, you're absolutely right. And in fact, he had as much problems with his own party as he did with the Republicans. In fact, we had regular leadership breakfasts with Republicans, and we had regular leadership breakfasts with Democrats. And he said to me personally, and I put this in my book, President Carter, the White House years, he said, Stu, I feel more comfortable on budget issues with the Republicans than I do with the Democrats. The Democratic Party at that time was looking for a second great society. There had been 8 years of Republicans, and now they had a Democratic president who they thought was going to build on the Great Society. But it came at a time of already high inflation. We inherited that from Presidents Nixon and Ford. And so he was constantly battling with the liberal wing of the party to get tighter budgets, and he achieved that. but it's some political cost. In fact, one of the reasons, again, we lost the election was because Ted Kennedy ran against him. He wanted cradle-to-grave national health insurance, which would have been, of course, very expensive, and that split the party and really helped lead to our defeat.
Stu, I know you took legal pads to every meeting that you ever had with the president, that you had such a long relationship before he was even governor of Georgia, and that formed the basis of that 2018 book you wrote. We really appreciate you joining us this morning. You're sharing some of these issues with us, and we'll be watching later today with your eulogy. Thank you, Ambassador.
Thank you for giving me the opportunity.
We appreciate it.
Next on Squawk Pod, the past and the future of private equity. I promise it's more interesting than it sounds. Steve Klinsky is the man who co-founded the private equity arm of Goldman Sachs in the 80s. He's a big deal, and he joins us. He's hoping for a more active 2025.
Deal making in general has been, held down for the last few years, and there's a lot of belief. I was just with one of the heads of one of the major banks, and the backlog of deals they think they're going to be selling is way, way up.
That's right after this. You're listening to Squawk Pod.
You are watching Squawk Box on CNBC. I'm Andrew Sorkin, along with Becky Quick and Joe Kernen. Private equity firm New Mountain Capital just sold its stake in accounting firm Citrin Cooperman to private equity giant Blackstone. For more on the state of deal making, I want to bring in Steve Klinsky. He's the founder and CEO of New Mountain Capital, a private equity firm with now more than $55 billion under management. Steve was also one of the co-founders of Goldman Sachs' private equity group back in the 1980s, one of the OGs. How are you, sir?
Fine, thanks for having me.
We've all been trying to understand sort of where private equity has been. There was a sort of slower period, whether we're sort of shifting out of that at the same time that we have this new administration, where there might be a lot more deal making. Where are we really?
Yeah, I think private equity has been a very good asset class for many years now. I've been doing it, like you say, since the early 80s. It's outperformed, over kind of any period of time with less volatility. Deal volume has been slow for the industry generally. My firm's done well, but I think that's going to pick up. Most people think there's going to be a lot more deal volume.
But there's also been a lot fewer exits.
Well, that's the same. That's the other part of deal volume. And again, my own firm's had a good record of it, but the industry overall, and I think just deal making in general, has been held down for the last few years, and there's a lot of belief. I was just with one of the heads of one of the major banks, and the backlog of deals they think they're going to be selling is way, way up.
But do you think that's a function of? Do you think that's a function of you that the regulatory environment will get easier for? But that's for big strategics for the most part, I imagine.
I think, again, I'm putting my own firm aside, which has been very steady. It has been a repressed deal environment. Interest rates have stabilized. The regulatory environment, I would say, has been pretty hostile to M&A. Right. People hope it will be less hostile.
What about the fundraising world? And the reason I ask about that is, in part because there have been so few exits. Yeah. A lot of the U.S. pension funds specifically, they're out of cash. They have no money to give to anybody. Yeah. And then everybody makes a pilgrimage to the Middle East. And you can even argue they're starting to try to spend more of their money in the Middle East itself.
Yeah. Well, again, for my own firm, we've raised a fund last year that went very, very well. I think the key to private equity is there's still plenty of money. It's a $5 trillion asset class. The real message about private equity is, are you a value-added institution or not? And the key is to be a firm that can prove to the LPs, who are very sophisticated, you can actually build businesses, do something, not just lever an index. And I think there's plenty of...
Meaning being great operators, helping...
Yeah, to me, the 40-year story of private equity, because I'm one of the original people since '81, is it's gone from a form of finance to a form of business. When I was with firms in the '80s, we had 5 professionals, and you're borrowing a lot of money. My firm now has 250 people. When on Citrin, which you mentioned, we used no debt at all when we bought the company. And so it's a question of the LPs are looking for, they don't want to all be in the stock market with all their money and tied to a few tech stocks. So how do you diversify? How do you have groups? And there's 5,000 private equity firms. So which ones can actually pick the right company, build it, sell it, do the right job? And
it's not about levering up.
It's not about, there's still leverage as a sweetener, obviously, but it's not leverage. It's not your granddad's private equity firm from the '80s. And if you are, you're not raising any money. So the key is to be a value-added institution who can prove that. And some of that is getting exits done as well, which is part of the...
There's a shifting model in play, that's a shifting model issue, which is, you have folks like Blackstone and others who are starting to think about, how can you turn this into a retail product?
Yeah.
Right? And then there's the Apollos of the world, which effectively are trying to create sort of this sort of permanent capital kind of structure or insurance-like structure. Where, what do you think of that? And how that will sort of impact all of this?
Well, there's a couple of questions in there. One is multi-asset class firms. So Apollo was known originally as a private equity firm. I think today I don't want to speak for them, they may be thought of more as a credit shop or an insurance firm, which they still do private equity. And so my own firm, for example, has a credit arm as well, a real estate arm as well. But the key is to use those same value-added skills to really understand a business. If you don't buy it, you can lend to it. So I do think multi-asset class makes sense. On the retail side, I mean, private equity is a very good asset class. I think it could make sense for retail, but I personally believe you have to be very careful about it and make sure that someone doesn't get telemarketed by a firm they never heard of and just give to a fly-by-night firm. So the groups like in Australia, you have Aussie Super, in Canada, you have the big gatekeepers that protect retail investors, because it is a very sophisticated decision to pick one private equity firm from the other.
We keep talking about how the regulatory environment may get better for sort of the big strategics. But one of the other interesting features of this, at least last administration, was regulators have started to look at deals put together by private equity firms doing roll-ups and what that looks like, especially in the healthcare space and other places where people say, you know what, they get worried that people are getting squeezed in different places.
Yeah.
Do you think that continues?
Well, I think, again, the last administration, not just about private equity, I think if you talk to kind of any business group, they will say there was a lot of hostility on the antitrust side and distrust of business generally. As far as roll-ups, again, there's good ways to do them and bad ways to do them. McKinsey just came out with a study I saw where, if you have the best player in a space with the best cost structure and the most efficiency, and they buy up a little mom and pop and make it more efficient, which is a lot of what roll-ups are, that can be very, very good. So it's not a question of rolling things up to, dominate markets. It's more often having a great business model you're trying to expand. And also, the roll-up is if someone builds their family business and wants to sell it at the end of the day, I mean, that's who they sell it to. So, and plus it generates a huge amount of tax revenue for the government and stuff. So I think, there's just been a lot of distrust about business generally, and kind of it feels like animosity to business generally, which I hope will be less in the new administration.
Steve, it's nice to see you. Thank you, sir, for coming in.
Thank you very much.
Thank you.
That's the podcast for today, this National Day of Mourning, honoring President Jimmy Carter. Thank you for tuning into CNBC and for choosing this podcast. We know you have a lot of business news pods to choose from, and we're grateful to have you here. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Sorkin, weekday mornings on CNBC starting at 6 Eastern. You can always get the highlights of that show if you follow Squawk Pod wherever you're listening now. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.